Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. This is episode 4 of beginner ICT trading concepts that I've been uploading. If you guys haven't watched the first ones and you're a beginner, go watch them. I have a playlist in my playlist section on YouTube. This is going to be Ep 4, time frame alignment. Now, in my last video, I did say I was going to do draw on liquidity next, but I think time frame alignment comes before draw on liquidity, so we're going to be going over that, and then in a few videos it will be draw on liquidity, how to understand and find where the market wants to go. But first, you have to understand, after we hit a PD array like a fair value gap or an old high or low, what time frame to go down to find the draw on liquidity, right? So the time frame alignments right here, I have PD arrays and the time frame that you want to align yourself with after a PD array is hit. And for the examples, we will just go straight down from weekly, straight down like this. So if we hit a weekly PD array, a 4-hour time frame, daily PD array, a 1-hour time frame, a 4-hour PD array, 15-minute time frame, 1-hour PD array, 5-minute time frame, 15-minute PD array, 1-minute time frame, and then 5-minute, the 30-second or the 15-second time frame, right? Price is going to do the same thing as it would on the weekly, down to the 5-minute, right? It's all just about how you're reading the markets. Okay, so let's just hop right in and go to the weekly chart and find where we can find a setup from a fair value gap or anything like that. So let's go just right here, because this one actually just kind of popped out to me. So let's go right here. What do we see on this right here? We tap a weekly PD array, the weekly fair value gap. Okay, so where do we go? The 4-hour chart. All right, so what happens from here? Now, the next video will be change in delivery, but before that, I wanted to make sure that you guys understand what time frames to go down to. So I'm going to drop that video on Wednesday. So come back to this video after watching change in delivery, because I'm going to use change in delivery on this video. Right? So right here, we tap into that fair value gap on the weekly time frame, sweeping out this sell side. Right? And what happens? Right here on this move higher, we have a change in delivery. But another thing you can look at is we create a fair value gap, right? Now, from here, we can say that the draw is higher because we have displaced away from this weekly fair value gap, right? This red box. Let's just move it lower so it's not confusing. We'll just move it to those lows, right? So we sweep these 4-hour lows and we displace, right, a fair value gap, an important fair value gap, because it has displaced away from a higher time frame key level, the weekly fair value gap. Right here, we tap into it, we retake this swing low, and then we start the expansion higher, right? These lows right here should not be violated because we have displaced away from that weekly PD array, right? So we're saying that this is the draw on liquidity. Okay, now from here we come back down, not taking this high yet, retake this low, which is fine because we continuously respect this 4-hour fair value gap, right? Bodies tell the story, wicks do the damage, right? You would have never been stopped out because we never violated these lows. Okay, and then right here, before we run that buy side, we tap into another fair value gap, and then we expand to that draw on liquidity, right? All that was framed from the weekly level to the 4-hour time frame, right? So I don't want to go down here because we have to do the daily next. So we're not going to go down from the 4-hour to the 15-minute. We will go straight to the daily. All right, so the next one we are going to do is the daily time frame. So let's just take a look right here. All right, so what happens on this candle? We come up, we tap into this daily fair value gap. So let's go down to the 1-hour for time frame alignment. What happens from here? We get a sweep of a high right there, right? Still respecting that daily fair value gap. Then what happens? We break a low with a fair value gap. Boom. Taps into this fair value gap and continues lower, right? What happens? Taps into a fair value gap that broke a low, continues lower. All right? What happens continues to happen. breaks a low with a fair value gap, continues lower, right? Now, why do we think that the market's going to continue lower? Well, we have this low right here. Oh, sorry. Nope. We swept that out, right? Well, we have this low here and this low here. What happens after we tap into a daily level? The 1 hour PD arrays should start to be completely respected, right? Taps into this fair value gap, respected. Displaces lower. We sweep out this high. We have up close candles. Sorry, you guys, I shouldn't have marked those off because I didn't teach that yet. But, oh, right here, we have a fair value gap that broke a low, continues lower. A fair value gap that broke a low, continues lower. We sweep that low, but we also broke this low with a fair value gap, continues lower to take out that daily sell side. All right? So, daily to the 1 hour. Okay? So, let's go from the 4 hour to the 15 minute. All right? Okay, wait, let me zoom out. Where should we go? Where should we go? We can do this one right here. Actually, we can do this one. I don't know. This one happened recently, so boom. 4 hour fair value gap. Okay. What happens from here? We sweep out a low, right? We don't have to retake it because we already dug beneath it, but actually you guys don't know about SMT. So let me hold off on that. All right. So what happens after we take this low inside that 4 hour fair value gap? Displacement, right? What happens here? Fair value gap gets tapped into, continues, boom. We retake this low, boom. Takes this low inside of that fair value gap, continues up. We inverse this fair value gap, right? So this can be another entry, right? Continues up. What are we saying is the draw on liquidity on the 15 minute? This high, okay? Now what happens from here? A fair value gap that did what? Broke above a high. Right, the last fair value gap that broke above a high. We even come down a little lower and dig into this one, but this is the one that continuously should be respected, right? Bodies tell the story, wicks do the damage. Now, this would be a 15 minute to a 1 minute PD array alignment, right? But you guys see right here, taps into that 4 hour, retakes a swing low, displaces away, fair value gap is respected, swing low gets taken, we come up, inverse this fair value gap, and then we go take the draw on liquidity, respects a fair value gap that broke above a high. All right, so let's go to the 1 hour. Okay, we can do this one. All right, so this one, fair value gap. Right, wait, did we take this high already? No, we didn't. Okay, cool. So we come down, market opens right here on this candle. We come lower, dig into a fair value gap, 1 hour to the 5 minute. Okay, so right here, we dig into that fair value gap, taking a swing low. We have a change in delivery here. And what's this fair value gap? A fair value gap that broke above highs. Boom, taps into it and goes to that draw on liquidity. All right, 1 hour to the 5 minute. This one was actually very, very simple. Jeez. All right, there's another example. As you guys are seeing, this is very, very simple. So let's go to the 15 minute. Let's just go, boom, right here. Oh wait, no, this is overnight. No, that's not overnight. We can do this. 15 minute fair value gap to this high, and then we even rotate lower. So let's go down to the 1. Where were we? Come on. Maybe I went back too far. Oh yeah, I definitely went back too far. Okay, so let's go like somewhere here. Okay, Friday was very choppy because we had a lot of news. Okay, right here. 15 minute fair value gap. All right, 15 minute fair value gap right here. Wait, I think this was the same 5 minute example I just did. It is, but we can do the 1 minute anyways. Right, so 15 minute fair value gap, we get a change in delivery up here, and we don't tap into a fair value gap until right here, right? this is a fair value gap that broke above a high, right? We don't have one down here, as you guys can see. Highs right here, breaks above it with a fair value gap. Boom, respected. But let's do another example because I just did the 5 minute on that one. So that was FOMC. Let's go to Monday. Monday. Okay, that looks choppy, so let's go to Tuesday. Right here. That looks choppy. Okay, right here. Right? What is this fair value gap right here? A fair value gap that what? Broke beneath lows. Boom. Let's go down. 1 minute. Right, taps into that fair value gap. Now what's this right here? A fair value gap that broke beneath lows. Continues lower. Right? And what do we have to target? This low. Oops. This low. And this low. Alright, so we already took that low before we tapped into that 1 minute, but we had that low down here. So what happens? A fair value gap that broke beneath lows. Remember, we tapped into a 15-minute key level, so the 1 minute PD arrays should start to be respected after that 15-minute has been tapped into because of time frame alignment. So the 1 minute's respected here. The 1 minute's respected here. The 1 minute is respected here. And then we continue to take that low, right? So with time frame alignment, the time frame that you are aligning yourself with, as long as your bias is correct, the time frame alignment PD arrays should always be respected. And when they're not, you're probably on the wrong side. So like right here, let's say that we came up, tapped this, retook this low, and then we came higher. Then the draw would probably be higher if we disrespected these 1 minute PD arrays, right? So yeah, time frame alignment is this simple. Now there's things in this video that I didn't get into, like order blocks, change in delivery, SMTs, because I'm just going over how to align yourself after you have found your bias, what the draw and liquidity should be, and then time frame alignment, right? So I figured this would come first because to find the draw and liquidity, you can use the time frame alignment to align yourself much better, right? So this was before market open as well, so that was like a nice move before market open, right? So yeah, this was a very short sweet video, but I'm not going to do the 5 minute because I don't have the 15-second on TradingView. I just use it on my TopStepX account, so I'm not paying for something that I don't need, right? But it's the same exact thing, right? Wait for a 5 minute fair value gap or a 5 minute low to be taken, and then boom, enter on the 15 or 30 second once you see the PD arrays start to form. Now the 15 second / 30 second is a lot more volatile, so there's a little more chance to be stopped out and then it go in your favor, but it works the same way as all these other time frames, right? So that's all time frame alignment is. Next video will be change in delivery and then order blocks, right? They are not the same thing. So I'll see you guys in another video. I'm out of here. Peace.